welcome to Business Morning right here on Channel Television. Start of a new trading week, and the local boss, that's been trading already since about 9:30 a.m. But let's get a check on how your money performed. That's last week. Closed at 148,977 points. That was up like 1.35%, and that's for the total trading week last week. And we see that that's for the equity cap. That rose by 1.36%. Let's look at the trading activity. That's for last week. Now we see value and deals compared to the previous week. That was much lower, 76 billion. That was the value of trades. Then we see deals, 126,000, lower than the previous week there. But volume, that was in the green, 2.42 billion units of stocks. That was what was traded. Look at the sectors that we track now. We see the banking sector, that was a lone loser for last week, 0.13% down. And then we see consumer goods, that added 1.93%. Then the biggest movers, industrial goods, 2.79%. Insurance, 2.56%. We see oil and gas, that was near flat there, about 0.04% for the whole trading week. Let's look at the top gainers there. We see that's the likes of Sovereign Trust Insurance, added 11.21%. Royal Exchange, 11.11% there. That's for that trading week. And we see the top losers now. We see Triple G and Company, 18.84% down. Academy Press, that was 17.92%. That was the performance for the week, closing at 9.60 naira. And we see Regency Assurance there, 13.94% down. Top trades, Consolidated Hallmark Holdings, Fidelity Bank, and Access Holdings. So mostly financial services there for that trading. Let's get a check now what play out with oil markets today. I was seeing oil prices were mostly flat, but that's for Friday. But we see the kicking off there, 0.75% down, losing that $61 level. That's for Brent crude, 0.75% to start this trading week. We see WTI crude, that's sub $60 there, 0.78% down at $57.09 there. So it's still about geopolitics right there. That's still driving sentiment right there in the oil market. All right, to other conversations now. The conclusion of the IMF World Bank annual meetings in Washington, D.C. there. We see the Minister of State for Finance. It says that she observed deep optimism about Nigeria's trajectory and renewed confidence of our global partners. She knows that over the week, the Nigerian team engaged multilaterally and bilaterally, from meetings with the Islamic Development Bank and the World Bank's Managing Director of Operations to the G24 and Coalition of Finance Ministers for Climate Action across all forums. Also a consistent acknowledgement that Nigeria's reform agenda that's yielding results, which include inflation moderation, exchange rates stabilizing, investor confidence is returning, and foreign reserves are strengthening. Their observations conclude with the task ahead to deepen reform, unlock private investment, and ensure that growth translates into prosperity for every Nigerian. I will see the Nigerian Exchange Group PLC, and that's in partnership with the Community Nutrition Intervention Project Bloom, which means bringing life to our overlooked miners. And I went to Ajegunle under Lagos State Health District 5, reaching over 120 children with their mothers and caregivers. The outreach held at Jeremy Felodun Local Government Secretariat in partnership with the Lagos State Health District 5. It builds on the success and measurable impact of the pilot held at Yaba's Ayetoro Primary Health Center, where hundreds of children were screened and over 61% were found to need urgent medical intervention. Following up, monitoring revealed that more than 48% of these children have shown remarkable nutritional recovery within weeks, regaining healthy weight and vitality. This progress has further strengthened the project's mission to expand its reach across underserved communities. The Ajegunle outreach, children received ready-to-use therapeutic foods and comprehensive health checks, while mothers and caregivers also got something there. All right, let's get a check now what played out with major global assets. Last week was another eventful week across global markets, with commodities, digital assets moving in response to shifting investor sentiment and macroeconomic cues there. Joining us now, let's have Mr. Tajuddin Ibrahim, Director of Research and Strategy, Chapel Hill Denham. Good morning, sir. Great to have you on the show. Happy New Week. But first off, let's kick off with the local boss performance. I guess it was quite good for last week. That's looking at the NGX there. Another positive close for the week. But what would you say, stood out for you in the trading week last week right here?
So I believe that, what really was driving the markets was, largely speaking, the fact that we have lower inflation number. And also, interestingly, we have a situation where, valuation is still very cheap. And if you combine those two, and you also add one further factor, which is, lower interest rates, those three elements, to my mind, are largely speaking, reflected in the performance of the market last week.
So, looking at this new trading week, what do you think investors, should be looking at? This a brand new trading week. We're still the month of October. That's almost coming to an end, at this point. Well, what sectors are getting your attention for this week?
So in terms of expectations, for this week, I believe that the market should be, paying attention to further reaction on the back of the lower inflation rates that we have seen. And also the market or investors should also pay attention to what we are seeing when we take a look at corporate earnings. Corporate earnings are going to be published. More of those earnings are going to be published this week. And the broad expectation is that those earnings will be, great, particularly for non-bank, companies that are going to benefit from much lower interest rate environment. And I think also another factor that investors, should pay attention to is the fact that we are seeing a broadly stable, currency exchange rate in this rate. When you have stable exchange rate, it is largely positive for the economy and also positive for companies that operate in the economy, particularly those that are listed. So I believe investors should also pay attention to this. And I reckon that this week most likely will be a positive week for the market.
All right, let's look at other markets now. That's the global assets. Let's see how they fared last week. Gold again outshining, most of the asset classes last week. That closed at $4,378 per ounce, up 4.8%. That's for the week. Oil, huge lagger there, 3.6% down. Then Bitcoin, that's supposed to be digital gold. That didn't do well, last week, $108,907, down 4.97%. So, what we're seeing play out, in the global asset place right now, seeing that gold again getting most of the attention. What is this telling us about the global economy right now, in your opinion?
Well, I think what we are currently seeing in the gold market is a reflection of the dovish monetary policy stance, by the U.S. Fed, and also, largely speaking, a broad expectation around, further rate cuts in the coming months. Before we end this year, for instance, the U.S. Fed has indicated that, most likely there will be, 2 more rate cuts before we end this year. And that, to my mind, is largely speaking, fueling optimism around gold, prices. So we are seeing the market, the investors respond positively in terms of how they are, buying gold. And this week, most likely, we are going to see that momentum being sustained because we still have a dovish U.S. Fed, and also we have seen markets react positively to lower interest rates. So, and also bearing in mind that there will be more like 2 more rate cuts by the U.S. Fed this year. This year, before we end this year, we still are most likely going to see gold go higher this week, which to my mind is something that investors should really watch out for in terms of how much gain or additional gain that they can make this week.
Right. And do you think gold is near the top at this point? Because I'm sure the investors there, looking at the rally of gold now and wondering, is this still a right time for me to enter this trade? What do you think about this price, 4,378? This is a good entry.
Absolutely. I think it is still a good time, to enter, because what we have seen so far in my mind is an indication of, the rate cut that materialized in September. And if you capture that and you also capture more like a dovish monetary policy stance by major advanced economies in the world, you would realize that gold is one of the ways to go when you have much lower interest rates. And looking forward, the market is also expecting additional rate cuts, and the 2 rate cuts that are expected are looking like up to 50 basis point rate cuts before we end this year. If that materializes, it is a lot positive for gold. And it is something that I believe investors, are taking advantage of. And if you go in at the current level, you most likely are still going to be a winner, on that asset class, because the additional rate cuts that are going to materialize, will also lead to additional reason or momentum for the market to react, positively. And if we are there ahead of, the rate cuts that the market is expecting, I believe that, you are going to make a decent return on investment in that regard.
Right. All right, let's look at oil prices now. 3.6% down that's for Brent for the week last week, and we're starting off this morning with some weakness. Now, is it time to get worried about government revenue here, looking at oil?
Well, I think for oil, what really we should pay attention to a number of factors. Number one is, what is happening between the U.S. and China in terms of, trade, tension between the two countries. We noticed that, for instance, both countries, introduced additional levy in terms of, port levies, just to, further deepen the trade tensions, between the two of them. And, that is also having an impact on, the other participants or players in the market in terms of, freight costs. So it is negative in that context. The second element to my mind is around the inventories buildup that we are seeing in the U.S. That is another, factor that is currently shaping the, the crude oil market. The third element for consideration is what we can call, glut, or let me say, oil surplus. In terms of supply to the market, which according to news sources is indicating that OPEC Plus are looking to increase, their output in 2026. When you bear that in mind, what you would be expecting is, for crude oil prices to dip further. And I think there are broad expectations that it can even dip to as low as like, $50, per barrel. So I would say that, what we saw last week for crude oil is not surprising. It is an indication of, these 3 key factors in my view.
All right, definitely. It's a brand new week. We'll see how these asset classes perform this week. Definitely Bitcoin didn't do well, 4.97% down for the week. Starting off this week at about 111,000. So we'll see if we'll see a recovery right there. Thank you so much, Mr. Tajuddin Ibrahim, Director, Research and Strategy, Chapel Hill Denham. Thank you for coming on the show today.
Thank you for having me on the show.
All right, now, so see the Chartered Institute of Brokers, they've concluded its 29th annual conference in Abuja. The event, which had in attendance players in the financial sector, as well as the Senate, accommodated conversations on how to accelerate digitization of the capital market for more effective operations. Take a listen.
For the 29th time, stockbrokers have invited individuals related to their operations to x-ray the workings of the capital market in Nigeria and how they can improve in their areas of strength and introduce missing elements. The meeting is focusing on capital markets in a digital, ethical, sustainable era, pathways for economic transformation.
Globally, capital markets are undergoing profound shifts, driven by three convergences. And the convergences are digital innovations, ethical governance, and sustainability. Emerging technologies such as blockchain, artificial intelligence, and fintech solutions are revolutionizing how markets operate, enhancing efficiency, transparency, and accessibility. This annual conference, we interrogate and integrate these three dimensions as mutually reinforcing factors.
The gap in financial literacy among the Nigerian populace is a source of concern for the Securities and Exchange Commission. The Director General, Dr. Emomotimi Agama, believes that this is another set of responsibility which players in the capital market must handle in order to become more impactful in the economy.
We are aware that there is a significant financial literacy gap in the country that we must deal with. And, of course, our economy is still clearly bank-dominated in contrast to the long-term oriented market economics of advanced economies of the world. It's therefore important that the capital market must live up to expectation. We must take the bulls by the horn and deal with issues the way they should be dealt with. The Nigerian capital market has come of age. We will, therefore, become solutionists rather than being complaints in the system, in the financial system of the country. These crucial areas that, if addressed, will have immediate impact on the market are enhanced liquidity to the market from pension funds, banks, and institutional investors. Financial support for the Chartered Institute of Stockbrokers and other participants in the capital market literacy drive, and more high-profile listings in the market. The expected listings of NNPC PLC, Dangote Refinery, and among others, will further boost the depth of the Nigerian capital market.
At the event, 48 members, including the former spokesperson of the Nigerian Stock Exchange, now the NGX, Mr. Shola Oni, were conferred with the fellowship status of the institute, while 220 others were inducted as associate members.
All right, now to our first conversation. The insurance industry thrives on one key ingredient, and that's trust. In a sector built around promises for the future, ethical conduct and professional standards are vital for winning and keeping consumer confidence. As Nigeria's insurance market undergoes major reforms under the new Insurance Industry Reform Act, the conversation around integrity, transparency and accountability has never been more important. This morning we'll explore how ethical standards can drive growth, the role of the Nigerian Council of Registered Insurance Brokers in elevating professionalism. Well, join us for this conversation. We have Mr. Keoma Ezeibe. She's the incoming president, Nigeria Council of Registered Insurance Brokers. That's NCRIB. It's great to have you on the show, ma. Good morning.
Good morning, Ladi. Thank you for having me.
Yeah, and I guess congratulations. In order, at this point, this Friday, you are the incoming president of this great establishment, and you're the third female president. You'll be the third one in the 63 years.
Yes, indeed.
Wow. And you're the 23rd president incoming.
Yes,
at this point. How does that feel?
Well, I somewhat feel fulfilled, and then I feel great too.
That's incredible.
And then I also feel have a sense of duty, and also a sense of responsibility. You know, to be able to live up to all the expectations surrounding this upcoming part of my professional life.
It's quite interesting. In 63 years, you're the third female.
Yes, yes, indeed.
Wow. Congratulations.
Thank you very much, Ladi.
First off, let's kick off with the insurance reforms, at this point. First of all, the capital requirements. Last time we had this conversation, we didn't have the full details, but now we have, some more details. You see the requirements there. Minimum capital for non-life insurance, about 15 billion naira. Minimum capital for life assurance, that's about 10. Minimum capital for reinsurance, 35 billion naira. So talk to me about these requirements, and you definitely will have a lot of insurance companies now that will be trying to make this happen. I think they have about 1 year to do this.
Yes,
what are you seeing so far?
Yes, what we are seeing so far is that there is hope in the horizon. Yes, indeed, you have enumerated how it is in the Nigerian Insurance Industry Reform Act, and there's a second leg to it. Actually, what it says is 10 billion naira for 15 billion naira for non-life, 10 billion naira for life, and 35 million naira for reinsurance, and risk-based capital, whichever of the two is greater. And so what the law wants to see is that no insurance company is carrying on risks more than it can actually contain at each point in time. So whichever of those minimum capital or risk-based capital that you have is the one that will rule the day. And then, of course, what the regulator has done is to make it seamless. And the reason it will be seamless is the regulator is not interested in making insurance companies to fail, because if they fail, it will be the consumers that will have the backlash. Not just the consumers as well. The national economy will also see the backlash. So what the regulator has done, the National Insurance Commission, is to set up a committee headed by Mrs. Tony Charles, a director in the commission, to see, to work insurance companies through this transition period to see that they achieve these things seamlessly. And so you are right in saying that they have a maximum of 1 year because the act has come into effect. And the law says maximum of 1 year after the law has taken effect. So that's what we have.
Right, and do you think the insurance companies have enough time to raise at this point, knowing fully well that we've seen the banks, some of them are still raising?
Yes, some of them are still raising, but I tell you, sometimes when you push someone to the wall, the person will then realize, oh, after all, I have this ability to do this. But when you keep postponing the evil day, then the people will start naturally being lax about doing that which they ought to do. And I think we have always expected this in the insurance industry. And so we're making, insurance companies are making every effort to make sure that they live up to it within the time given by the law. And they don't have any choice anyway, because it's already a law. It's embedded in the Nigerian Insurance Industry Reform Act. And that's why the regulator has a responsibility to make sure that they walk them through this path towards actualizing that.
Do you see big mergers and acquisitions coming?
That might just be because it will be good when you look at yourself, you advise yourself, instead of first mergers and acquisition, you then know that this is actually the route to go within the 1 year period. So some of it might end up in mergers and acquisitions, but there are some that are already fully recapitalized. Yes.
All right. Do you see, definitely reforms, most of the time they can be quite painful.
Yes, indeed.
For one party. Where do you see pain for consumers? The reforms you're seeing so far.
If you ask me, I don't even see any pain for the consumers, because what this act has done is to protect, give an oral protection for the consumers, and it is for them really that the increase in capitalization, was put into place, and for the national economy as well. So I don't see anything hurting them. The law has taken care of them in so many ways, that I can start enumerating right now, which is really good, because when they are happy, we are happy, and business is good.
So I guess no pain, for the consumer, and I guess when you have a claim, are you going to get, attended to immediately?
Of course,
and fast?
Of course,
with the
yes.
reforms?
Of course, yes. Being a broker, I am exceedingly happy with what the law has done, because the broker is the professional insurance advisor to the consumers. And so when a claim is paid, and very quickly too, it is a validation of what the brokers do. Is a good testimonial for us as insurance brokers. And so what the law has done is this. The law says an insurance company has up to 60 days within which to pay a claim. And even the insurance companies, most of them don't even wait for up to 60 days before they know they have to pay that claim, because it's also an advertisement for them. And then the law also says if it is a reinsurance claim, then the 60 days will start counting from the time they have issued their discharge voucher, because reinsurance arrangement is slightly different from a direct insurance arrangement. The direct insurance arrangement starts counting from the day the claim is filed. And then what the law then went on further to give the consumers other recourse, assuming this fails, the 60-day fails, the consumer can, of course, by going through the courts, they can now get the courts to make the regulator, NICOM, to dip their hands into the statutory deposit of the insurance companies in order to satisfy that claim. And of course, the insurance company will then pay that back, because it is like a loan. And the law has gone further to establish the Policyholders Protection Fund, which is a good thing. And this fund is derived from 0.25% of the premium due to insurance companies. And then the commission now sets up fund managers to fund it. And really, that fund is supposed to grow. It's an investment fund which is supposed to grow. And should any insurance company not be able, for reason of going underground, winding up, or reason of having the license withdrawn by the regulator, then the regulator can then pay claims from that fund. But then that insurance company will definitely pay back, whether your license has been withdrawn or whether the insurance company has gone under, because this holds a first line charge to the winding up process and the creditors, so that it can be put back and it keeps on growing. Actually, this has been the way it is in civilized jurisdictions, and we are civilized. So it's high time we took the whole bull by the horns and then instituted it into our law too. So these are all measures taken in by the regulator and this act, to make sure policyholders are protected. And so for us brokers, we are really happy, because either way, the claims will have to be paid. And in any case, the good thing is that with the recapitalization, we don't even need to have recourse to all of these measures, because when we have insurance companies that are stronger than they are, they will more readily pay claims. And then we won't be talking about whether 60 days has passed, claims has not been paid, where claims have not been paid, or policyholders protection fund having recourse to it.
All right, so is there anything in there for third-party claims?
Yes, it is, of course. Okay, what the motor third party has done is this. When I came here the last time, I did tell you the reason that motor third party and other compulsory insurances were instituted. It is to protect the duty of care that we owe amongst ourselves, so that we don't run our businesses and our affairs in a manner that we do not put in consideration to other people around us. And so with motor third party, what this new law has done is this. It has increased the benefit in motor third party to 2 million naira. And this 2 million naira would be either property damage, injury, or death. And then they've gone on further to protect unidentified drivers who knock down people, victims of unidentified drivers, by instituting a fund which is made up of, I think, about 0.5% of the profit of motor insurance from insurance companies. And that is where the regulator will dip its hands and pay victims of unidentified drivers. And so these are all the things that has been done, and which is very important. People don't even know it. With just 15,000 naira, basic, you will obtain a motor third party cover. And then with that, you have a certain appreciable measure of protection against people that you may knock down, injure, kill, or destroy their property.
So quite a lot, in there for everyone.
Yes.
At this point, and I did see something for regulation of intermediaries, ban on agents collecting premium. So I guess agents prohibited from collecting premiums on behalf of the insurer. Payments must go directly to the insurer. What does this change?
Okay, what it changes is this. Agents are usually the agents appointed by insurance companies. So the insurance companies are their principals, and so are directly responsible to them, although they are some form of intermediary, but they are not professional intermediaries like insurance brokers, who have gone through, the same type of educational and professional training like the insurance companies. Agents may not be insurance professionals, and more usually than not, they are not. And so before, they would collect insurance premiums, just like other agents can collect payments on behalf of their principals. But the law now does not allow them to do that. Payments are made directly to the insurance companies. And all of these are geared towards consumer protection, to make sure that the insurance company has received that premium.
So before now, were there issues, when the...
I wouldn't really know whether there were issues. Remember, I did say that the agents are agents of insurance companies. They are not agents to us. So they are accountable to the insurance companies that appointed them. So I wouldn't know as a broker.
Right. Yeah. All right, so what can we expect from the NCRIB going forward now with the reforms and you, the incoming president?
It's really interesting. The reason is interesting, especially for me. This, I don't know whether you've been following this. It was in 2016, actually, that the ministerial bill, consolidated insurance bill, there was a ministerial committee that was set up by the federal government. And then we went through all of that process, public hearing, all of that. And then it didn't see the light of the day. And in 2016, there was consolidated insurance bill again, a private members bill. Didn't see the in 2020, it didn't see the light of the day. Then in 2023, there was also a private members bill, Honorable Darlington Wokocha, who saw it. We thought it was going to be signed by President Muhammadu Buhari. Unfortunately, it was one of the bills that were not signed at the time. And then Senator Adetokunbo Abiru came and took the bull by the horns. And maybe just as well it was not signed, because he brought in what he did, Senator Tokunbo Abiru did, was to bring in a lot of contemporary issues into the bill that is now taking care of the way modern insurance should be practiced. And now it culminated into the Nigerian Insurance Industry Reform Act. All of the 9 years that all of these things happened, I had been at the front row on behalf of the Nigerian Council of Registered Insurance Brokers. And so it is an exciting time for me that at a time I'm going to take the mantle of leadership, that implementation of the law has now come. So it is something I look forward to, and every broker is excited about. Successive presidents had walked through all of these bills in the past 9 years, and more especially the outgoing president, who I had been going with, in respect of the last bill that culminated into this act. And so it's an exciting time for brokers. Although when you asked me about challenges, we also have challenges in there. But are they challenges that we are prepared to take? Yes, they are challenges that we are prepared to take, because we have to brace up and operate much more professionally than we have done, because it is a contemporary bill. So we are contemporary professionals who are going to now operate along the lines of this fantastic bill. Fantastic act.
I guess that's a good place to anchor it, and congratulations again, Mrs. Ekeoma Ezebe. She's the incoming president, Nigeria Council of Registered Insurance Brokers, NCRIB. Thank you so much for coming on the show today.
Thank you. You're welcome. Thank you so much for having me once more.
All right, we'll take a break now. When we come back, more conversations. We'll see what's playing out with the payment ecosystem in Nigeria. That's in a moment. Just stay with us. The Lagos State government, with support from the French Development Agency, that's AFD, European Union and European Investment Bank, set to revolutionize ferry transport with the launch of the Omieko project, an ambitious initiative designed to restructure, upscale and modernize the city's waterways sector. The group says that the project will establish and organize efficient and affordable ferry system that enhances connectivity and improves the daily lives of residents in Lagos. Omieko project comes with the promise to attract more attractiveness on the waterways in Lagos. The team representing the African French Development Agency have a first-hand experience as they visit communities around the waterways in the state. Those will be directly impacted by the proposed increased activity. Take a listen.
This project is Omieko. It's dedicated, it will provide new solution, a transport solution through Winterway corridor for the Lagosian. And we wanted to have the opportunity today to visit a community which will benefit from this important project in the next years, to listen to the expectation, needs, and also worries maybe about this coming project, together with Mr. Commissioner, to be able to start explaining what it will consist in.
The whole essence of this project is to develop the waterways, and also in doing that, communities will benefit, because we would have jetties, would have electric ferries that would come, and also there will be upgrades in those jetties as regards the kind of jetties that will be. It's also an opportunity for us to move from fossil to clean energy, which this project will also provide. One of the major things that we should always remember is that this project also speaks a lot to inclusivity, which means that the community that would be benefiting would be part and parcel of the project itself, because without them, really, we would not be able to run it well. So there will be a lot of stakeholders engagement, there will be a lot of training that even the communities would have to go through in understanding how to manage the assets that will be handed over to them.
All right, so over the years, Nigeria's payment system has evolved into one of the most advanced in Africa, driving financial inclusion, innovation, and a growing digital economy. Now the Nigeria Interbank Settlement System, that's NIBSS, has taken a major step forward with its transition from the long-standing NIBSS Instant Payment Platform, NIBSS, to the more advanced Nigeria Payment Switch, NPS. Let's discuss this now with Ramon Bello, the General Manager at Paga Engine, joining me right here in the studio. It's good to have you, sir. Good morning.
Thank you very much. Thank you for having me.
Fantastic. So, so the circular by CBN says they're mandating all licensed payment operators to adopt the ISO 20022 messaging standard.
That's correct.
Full compliance of both ISO 20022 migration, geotagging. We have a deadline, I think October 31st.
That's correct.
That's That's around the corner.
That's around the corner. That's correct.
Are you nervous?
Not really.
For our payment system,
no.
it seems so close.
Yeah.
Then the minimum operating system for all terminals must be Android OS V10. So let's start, with the basics now. Talk to me about this transition from NIBSS to NPS.
Okay. So for the last, I guess, more than a decade, I think since 2021, we've had the NIP, which has been the engine behind interbank transaction in Nigeria.
Because I remember before now, when you're trying to make transfers, if the person you're sending money to say, please make it instant,
yeah,
it has to be instant. I don't want the one that will come in like 3 days.
So that engine that makes it possible for you to send money from Bank A to Bank B, and in less than a second, you see it in Bank B. That is what the NIP does. And this has been the system that has powered the Nigerian payment system over the last 14, 15 years. And it has done a great job. Kudos to the central bank, to the NIBSS team. They've built an engine that has really unlocked Nigerian payment system. And when it comes to interoperable bank transfer in Africa, Nigeria is #1. Like, there are only 1 or 2 countries that come close, not at par. And the system that has really made that possible is the NIP. And what is happening now is Nigeria is more like ready for phase 2. As you know, we're targeting $1 trillion economy. You need a payment engine that can really make that happen. NIP has really done a good job. But we are approaching, that stage where we need to make that transition. And I think that's where the conversation around ISO 20022 comes into play, in the sense that it unlocks a new level for the payment system in Nigeria, where some of the evolving issue that has started coming up around NIP, this new payment system really handles them much better. So for everyday Nigerian, is going to unlock a new level where you send money from a Bank A to Bank B, and in less than a second, the money just gets there.
That's for the Nigeria Payment Switch.
Yeah, that's the NPS. Is actually the National Payment
National Payment Switch. Okay.
Yes, system.
All
Yes.
right.
So it's really a big upgrade for Nigeria. And looking at an economy that is targeting $1 trillion very soon, this is the kind of upgrade that we need, that will really make that happen. And it's going to be one of the first in Africa when it comes to adopting this new standard. And also, it's a standard that would power billions of transactions almost every second. So it's really a big deal for Nigeria.
So, definitely when you hear, upgrades, migration, as a user of whatever service, that is, most of the time there's a risk of issues, glitches, failed transactions. Is there a risk we're going to see that with this migration?
So this is not going to be starting from the scratch. It is building off what we already have, which is what I've been discussing, the NIP. It's more like you're building a V2 of the same thing, only that you've done it in a way that you look at what you already have, and you've seen all the different aspects of it that needs optimization. And what you're doing with this upgrade is to fix all those things. Some are fundamental in the initial design of what we have today. And what this new system is doing is fixing those specific areas. So it's not us starting from the scratch. It is us basically, moving to the next level. So when it comes to, expectation around, could this, prompt something breaking, something not working, this is not the kind of system that will do that, because we're not starting from the scratch. We're basically just looking at what we already have, and we're making all the update that needs to happen. So again, kudos to the NIBSS team and to the central bank for also pushing this forward. This is the kind of upgrade that Nigeria needs at this point. And as we're targeting, $1 trillion, this is the type of update that we need, that needs to happen. So when looking at the timeline, I think it's much visible. It doesn't mean like the communication started yesterday. It has been an ongoing engagement up to this point. So what we're expecting then is, in the next couple of weeks, we start seeing a lot of difference. where a lot of banks will start moving, processing transactions using the new payment system. And for a customer, it really wouldn't make much of a difference.
So the customer you don't have to do anything.
You don't have to do anything.
On your end.
You don't have to do anything. The only thing you see is that, I send this money, it's much faster now. Those are the kind of experience you have. And if you have some kind of experience where, typically it takes maybe like a few seconds, then think of it like that timing, cut it into half. This is the kind of speed you have. And if there's, any other type of experience you have in the past where, there's some time in the day, you do some transaction on some platform, you don't get those kind of experience, but this fix all of those minor things where even at peak time, you would have as much good experience as you will have as any other time.
Because I remember there was one time, I went to a supermarket, I was trying to, make a payment, and the traditional banks didn't work. The fintechs didn't work. And the complaint that time was, NIBSS is down, and that's why the payments are not going. It was quite a hellish day. I remember that day, there were so many customers trying to make payments. Nobody could make payments, except you were maybe doing from a fintech, using the same fintech company, then the payment would actually work. So is that going to be a thing of the past? And we're not going to see here, so it's down.
So those type of issues are what I referenced earlier, that, look at the current system and you think of it like, okay, what are the things that makes those kind of experience happen? Where you are standing there, there are fundamentals behind the scene, where it's not really the bank, there's a system in between them that is moving those transactions. So when one of the issues you see now is, I remember late 2023 during the cashless move by the governor. It was a lot of things, like a lot of transaction has to happen digitally. And we all know the kind of experience.
It's interesting you would mention that, because now I'm imagining if we had NPS when we were trying to do the cashless policy, would the banks have been able to handle?
It would have been a total game changer. Because what happened back then is there's a lot happening at the same time, where the current system seems to have gotten to the point where it got too many traffic than expected. And the way the current design works is there's a lot of traffic coming from each of the banks, bombarding the system, and because there's a lot also happening in the market, that creates a type of pressure that the system could not handle. So this new design and this new upgrade that we're getting is actually designed for that, where if it gets to any point in time, we wanted to try that kind of,
Maybe we'll give it another shot, the cashless.
You never know. But
or redesign 2.0.
You never know.
All right.
The key thing is, if that were to happen, this is the type of system we need to be in place before we do that.
Fantastic. We'll keep tracking it, and when the migration is done, we will track and see how fast transactions go. Thank you so much. Mr. Ramon Bello, General Manager, Paga Engine. Thank you for coming on today.
Thank you very much.
All right, we'll take a moment now. Let's get a check now what's to expect for the global economy and what's happening with most of the top economies. This morning we have Ini John McQuarrie with the details. Good to have you, Ini. Happy New Week.
Happy New Week, laddie. Well, welcome from last night.
Yes, in the night.
To the morning.
Yes.
Oh, is it still you?
It's me.
Oh, okay.
It's not AI.
Great.
So, Ladi, I think one of the biggest news that's falling out from last week is the protest against President Trump's policies. And, you know, we've been counting some benefits from his, America First policies. And so I thought more Americans should be happy with what he's doing, his approach to the economy, you know, like compelling companies to bring investment and even
bring back the jobs in the US.
Bring back the jobs, and then even the companies existing in the country with the H-1B visa fees, $100,000. How many companies can afford that? So I think I just assumed. So when I saw the protests, I was like, so who are those protesting and who are those benefiting?
They're not happy with the government shutdown.
Okay,
the Democrats and Republicans
I think
not able to make a deal at this point, and some workers not being paid.
Yeah, and some workers have been laid off also.
Laid off.
Yeah, so that's all. But perhaps that's where the protest is coming from. But anyways, so good morning, everyone. The other things happening, or we're expecting this week, is from the United Kingdom. From tomorrow, we're expecting the public sector debt borrowing. We've been hearing a lot of numbers around that. And then from Switzerland, the M3 money supply would be shared. Of course, that affects inflation. That's why it's important, the money in circulation. On Wednesday, from the UK, again, the core CPI, Consumer Price Index, that's expected. And from the United States, crude gasoline oil and inventories and gasoline inventory. This affects, you know, the perception of what's available, oil supply, and of course drives down to the price. We see it a whole lot of times affecting the price movement of crude oil. The Bank of Korea, they'll be having their monetary policy also on Wednesday. We'll see which way they go. We've seen, you know, with the tension between China and US, we've seen it reflect in investor sentiments in the market. But somehow we saw Korea find a way to go above it, especially like on Friday, where there was recovery. So we'll see how the monetary policy will react to that. In India is very much in the news this morning, and the manufacturing PMI, we're expecting that on Friday. Now to other stories at this time. China's economy grew 4.8% in the third quarter from a year earlier. That's the slowest pace in a year, but in line with what was expected by analysts, despite ongoing real estate slump and of course the tension with the US. Fixed asset investment, which includes real estate, unexpectedly contracted 0.5% in the first 9 months of the year as spending on infrastructure and manufacturing slowed. Analysts had expected a 0.1% growth. Property investment extended its decline, sliding 13.9% in the year through September, compared with 12.9% drop during the first 8 months of the year. The drop in fixed asset investment is rare and alarming, according to some of the investors and analysts, market analysts who have been following the matter, and they warn that the fourth quarter GDP growth faces downward pressure. The last time China recorded a contraction in fixed asset investment was in 2020 during the pandemic, according to data going back to 1992 from Wind Information. And still in China, export of rare earth magnets fell in September, reigniting fears that the world's top supplier could wield its dominance over a component key for U.S. defense firms and makers of items from cars to smartphones as leverage in trade talks. I believe they're meeting soon. In April and May, Beijing squeezed global automakers with export curbs on a range of rare earth item and related magnets, while negotiators faced off over triple-digit U.S. tariffs on goods from the world's second largest economy. 4 months on, after Washington and Beijing unexpectedly reprised threats of fresh tariffs and rare earth export curbs, worry is growing that China could return to the same playbook. That would mean that it reneges on a June deal with the U.S. to ease the flow of critical minerals. And China's shipment of rare earth magnets fell 6.1% in September from August, according to data from customs, ending 3 months of gains and dropping even before Beijing unveiled a dramatic expansion of its export licensing regime. That's expected
this week. And U.S. President Donald Trump has reiterated that Indian Prime Minister told him that India will stop buying Russian oil, while warning that New Delhi would continue paying massive tariffs if it did not do so. Asked about India's assertion that it was not aware of any conversation between Modi, that's the President or Prime Minister of India, and Trump, Trump replied that if they want to say that, then they'll just continue to pay massive tariffs, and they don't want to do that. So, of course, we know President Trump has been threatening China and India to stop buying Russian oil so that the sanctions will be felt by Russia. And he told us that India had promised to stop that, but now we're seeing the reverse in this case. Well, Ladi, this India choosing to pay big tariff and buying cheap oil from Russia, or facing the sanction from the U.S., it's a major one because we know that India gets most of its oil, source of energy, from Russia. So I don't know how Prime Minister Modi is going to balance.
Has a big decision
to
make, you know, at this point. But I guess uneasy, where's the the head, where's the crown?
The head, yes,
you know, at this point.
Lies the head,
thank you so
crown.
much, Ini. We'll definitely be tracking, you know, how this impacts most of the markets that we track at this moment. But that's the show today. Thank you so much for watching. We'll bring you updates on what's playing out with the markets that we track. That's at 1:30. I'm Ladi Williams. Bye for now.